Today, I'm going to share with you a simple method that you can use even when the markets are going down. Everything is melting. When crypto's melting, when stocks are melting, you can use this strategy to continue making money week after week, day after day in almost a passive way. So let's talk about it in today's video. So with the fear and greed index showing a state of fear in the markets, we also have the stock market, which is not doing very good overall. But crypto more specifically has seen ups and downs. A lot of negativity is being talked about in the crypto space right now. Some people don't know if they need to be bullish. Some people don't know if they need to be bearish. There's numbers being thrown of $70,000 correction for Bitcoin, $2,100 correction for Ethereum, and for Solana, $140. So with these numbers and with the Bitcoin dominance going back towards the 60, now it is a 60.17, the total 2 and total 3 market cap, they're showing weak signals that maybe alt season won't be happening right now. With all of this negativity, with all of this uncertainty happening in the market, a lot of people are kind of stepping back. So they are either looking at other things like trading, for example, meme coins on Pump Fund, which they can go again pushed to Radium. They're doing yield farming. A lot of people are stepping away from trading as a whole. So what if I told you there's a way for you to make passive income with USDC and also a little bit less passive income, but more active income with your USDC or USDT. Today, we're going to be covering what we have to offer here at Bitopics. If you're new, this would be interesting for you. If you're not new, you already know what Bitopics has to offer, and you can comment down below. How is it going for you with Bitopics? I know we have a lot of friends here depositing. I know we have a lot of friends making money with Bitopics, especially on the two strategies that I'm going to show. So let's jump into it. The first one is the copy trading. So just if you, for example, are on any exchange like Binance, Bybit, whatever that could be, you know, they have a copy trading section where you can choose to copy a specific user, specific trader, and you give that trader a percentage of the profit. Well, here is the same thing, but with a twist, because here we use options. And with options, we can still make a very good annual income while maintaining the drawdown, meaning the amount of money that you lose per trade lost, very low. Because if a trader is doing futures, for example, and he does not put a stop loss or his strategy is very aggressive, what could be happening is that this trader may be very aggressive and is gonna liquidate you just because maybe you don't have enough margin to trade as he trades, or maybe because he's too aggressive and he loses a lot, but when he wins, you just wins big, but you got him on a bad streak. But this is not the case here for the copy trading on Bitopics. If you see right here, we have two strategies and both of them have been very successful. And if we look at the MDD here, which is the maximum drawdown, meaning how much you can lose per trade lost, here is 2.4% only, and on the other one is 0%. We round it up to 0 because we rarely lose money with this strategy right here. So let's take a look at these two positions. We have the 0DT and we have the Phoenix. The 0DT, as the name suggests, if you know what a 0DT option is an option that is traded and has a lifespan of less than 24 hours. So it expires in less than 24 hours. And if we look right here, we've had very good months, and so far we are at 2.51% in the month of February, which is a little bit slow. But if you look at the other months, we had 10% on September, 9.9 in October, 6.7 in November, 4.54 in December, 5.15 in January, and 2.5% in February. On the other side, you have the Phoenix, which has been steady at around 1% per month. Sometimes it does a little bit more, and hence the 22% per year. This is an average and it changes according to the months, how they're performing here. So far, the projection for the 0DT is at 101% over 1 year. So in 1 year, you're going to double your money. And so far we have $1.6 million deposited here, the assets under management, which is quite a lot of money. So if you go on the Explore, you can see that we have some losses, but these losses are way less than 1%. So we have above 4% here. We have a lot of greens and just 3 losses. And these losses are not very significant, meaning that they do not wipe out like days of work. No, maybe 1 or 2 days, but you can still see the results as you can see in this graph right here for the last month. And for the Phoenix, guess what? There is no losses at all. So you can see right here, all these trades have been profitable. Some of them may have just small returns, like these three right here, this one right here, but overall they keep going up and up. The strategy keeps going up and up. So we had 17 consecutive wins and 0 consecutive losses. The average trade gives 186 bucks. The average loss 0 because we didn't have none with this strategy. So this is the first strategy that I like to talk about with you. Maybe you're farming USDC, USDCE on Uniswap. Maybe you're farming whatever other stablecoin, and that is giving you maybe 10% per year. Well, the Phoenix could be a good strategy for your stablecoin, for your USDC, because it is double what is the average rate in the market. Maybe even more than double, 200 to 210% more than what we have in the market right now. But if you are a little bit frisky, if you want to get a little bit more risky, we have the 0DT right here with 486 people deposited so far. And this strategy is paying way more. Sometimes you do have some losses, you can see right here, but overall we have not closed a single month in the red. So this is fantastic if you want to keep your money right here. But Everton, you mentioned 2 different strategies. What is the second one? Well, the second one is the earn right here. These are spreads. Spreads made easy so that you can just come right here, open a spread, and know already how much is your maximum loss and your maximum profit. And again, because they are options, they do have expirations. So you need to know a little bit your target and your expiration. Maybe it sounds a little bit complicated, but we have a video explaining spreads in this channel. So just go in the channel, subscribe if you're not subscribed already, and type spreads here on the search bar. You're gonna find me explaining spreads for you in a very simple way. But Everton, I know nothing about spreads. Guess what? We made it very simple for you, meaning that if you think Bitcoin or Ethereum by this date right here, so let's say by February 22nd, is gonna be above or below the prices that you see right here, then you can open this position and you already know how much you're gonna make and you already know how much you're gonna lose. How much am I gonna lose? Well, you're gonna lose as much money as you put in. So if you put in 50 bucks, that is your maximum loss amount. You cannot lose more than what you put, and you can make these returns right here that you can see. So imagine in 3 days making 54% returns. Imagine in 2 days making 1,440. Of course, this is super unreachable in my opinion, but imagine we get lucky and the markets rally. Maybe Trump says something that is very crypto friendly and we go above the $109,000. They'll give you 1,185% on your money. So if you put $50, you're going to get 1,185% more. So here's an example. If you put 50 bucks, you're going to get a maximum profit of $592.62. So you can see how crazy these numbers are. We have 52, 57 right here, 44. We have very good returns. And again, you only need to understand where the price won't be. It is easier to predict that we won't be at $70,000. So if you can find an above 90,000 or an above 55,000, 70,000, 80,000, that is way less returns, of course, but that is more guaranteed. You can see from the risk right here, the risk reward ratio right here, but we've made it in a way that you can play around and find the best strategy for you. So for example, if you believe that by the 22nd, Bitcoin will be above the $93,000, you go right here, you look at the charts, we are in the daily charts right now, and you see that the bottom of the Bollinger is 93.5. The $93,000 could be doable. You look again, you go maybe to the weekly, and now the weekly, you see that we are trending on an average, but we are right at the point of control right here. So we could be bouncing off this right here and heading back up. So if you believe this is the case, the $93,000, this one right here, could be interesting for you to get in. So let's say we put 50 bucks here. Guess what? You can make $35.90. It means that when this option closes, you're going to get the 50 bucks back plus $35.90, 36 bucks just for you to open this position that was not very risky for you to do so. Maybe you want to try something with Ethereum, then you look at the Ethereum prices right here. So for Ethereum, for example, if you believe Ethereum will be above the 27.25 by February 22nd, you look at the charts, you see we've bounced back here from the bottom of the Bollinger. We're looking to test this range right here, the 3,000 once again. Maybe you go to the daily to take a look. We hit the bottom of the Bollinger. We're testing the trend line right here, the EMA. Maybe we can go up. If this seems bullish for you enough that the 27.25 is doable for us to be above that, then you go there and you choose this one, for example. You click right here, open position. If you put 50 bucks, you're going to be making $24 back. And again, as I said before, you're gonna get your 50 bucks back plus 24 on top of it. This is your profit. So we have a lot here for you to do. You can even go pretty much like leaps. You click right here on December and you have a lot of leaps to choose from. And this can make you over 100 to 340, 430% return on your investment, on your strategy, 700 on Ethereum right here. So there's a lot for you to choose from with these strategies. And as always, the maximum you can lose is the amount of money that you deposited. So if you are used to futures, for example, and you have that cross margin on, meaning that is going to use not only the margin that you deposit, but also the margin that you have in your portfolio, the amount of money that you have in your portfolio. And that can give you a lot of negative P&L. For example, I've been holding a 2000% negative position on Ethereum because it crashed and it was very, very leveraged. So in this case, there is no such thing. The maximum amount you can lose, Ethereum can go down to $0. If you're betting that Ethereum is going to go up and Ethereum goes down, the maximum that you can lose is the amount of money that you deposited. So this is the secret, and it's actually no secret. Institutions, big whales, they use advanced derivatives like options, for example, to keep their wealth, to make more wealth, and to protect what they already have by hedging positions, by keeping spreads open, by keeping leaps open. So these strategies that you may be thinking they are super complicated, they are what smart money uses to keep their wealth and grow their wealth throughout years. So even though it doesn't look as appealing as going max bidding 400x on broccoli, for example, this is a way for you to maintain and grow your capital in the crypto space. So this will be it for today's video. I hope you guys enjoyed. Again, we're getting set up here in the new office, so I'm sorry if you have any audio or video issues, but thank you so much for reaching all the way to the end of the video. I hope you guys have a fantastic week, and I'll catch you guys on Friday for another video. Peace.